All right, here we go. Hi, everybody again. This is your credit score with Renee Edwards from Corporate America Federal Credit Union. And Renee, I'll turn it over to you. If you have any questions, again, please feel free to put them in the chat.
Hi, everyone. So I don't, people aren't talking right now. We're just going to chat.
Is that what you'd prefer, or do you want them to unmute and ask?
Well, I did want to see, was going to ask a couple questions. So if you would prefer for it to go into the chat, that's fine. Or they can
either way
hop on and raise their hand or whatever they want to do. So I'm Renee. I'm the branch manager at Corporate America Family Credit Union. And we also go by CAFQ. I know that's a long name. The workshops that we present are actually given to us by a program called Balance, which is completely free to our members. So, and membership is completely free as well. Because you work for the library, you're actually eligible to become a member with us. So what that means is you open up a savings and put $5 in. And you would be able to use Balance for financial education and financial credit counseling. So where most credit advisors will charge you for that, they do this completely free. They also have a really great alternative to consumer credit counseling, which is their debt management program, where you would sit down and go through your finances with a fine-tooth comb and kind of go over different ways that can save you money. You would tell them what your goal is, and like maybe you're looking to buy a house, or you're getting married, or you're trying to pay off your student loans and you're just getting nowhere. They would be a really great asset to go to find out what do you need to do, where do you need to start. So they provide these financial education workshops to us and services to you as members for free as well. So the workshop today is about your credit score. I'm going to start sharing my screen. It's going to be a PowerPoint presentation while I'm talking, so it'll just be a second while I do that. Okay, and you should all be seeing the slideshow at this point. So your credit score can have a major impact on your life. I wanted to ask why you're here. Is there anyone in here that has anything specific that they're looking for, or any questions that you want answered about credit? Your credit report I just kind of wanted to check in to see if anyone wants to ask any questions. You could definitely raise your hand or put it in the chat. And I'll keep an eye on the chat as well. If I see one come up, I'll try to answer the questions. Okay, it looks like there's a couple questions in the chat. And then Daniel, I'm gonna go ahead and if you want to unmute and share your screen or whatever you want to do.
Yeah, hello.
Hi.
I'm here mainly to learn more up to date about changes in how the credit score is being used today.
Okay. Excellent. All right, so I'll go over this, and then at the end, if you have any questions, I'll give you an opportunity to ask questions then too. I just wanted to make sure before I start that I don't miss anything that you want to hear about, because you're the ones that registered for this. So the credit score has a major impact on your life when you're making major decisions like buying a home or purchasing a car. That's generally what people think about when they're worried about their credit. Is I just want to be able to make sure that I could get the necessities that I need in life without any problem. Not only does it give you your credit score being higher gives you higher chances of being approved, but the higher your credit score is, the lower your rates are going to be. So as CAFQ, we are considered a risk-based lender. Risk-based meaning the rates can be higher for the riskier the loan is. So if your credit score is lower, the rate can be a little bit higher. Now, although we're generally a lot lower than what banks offer, it's the same kind of pricing. So where I've seen at a car dealership where somebody's score is at a 600 and they're getting offered 24%. Well, we might be offering 9% versus 3%. for someone who scores 700 or higher. At the dealership, I've seen them offer anywhere from 7 to 24% in the 600 range. So that is a huge range. It can vary from lender and different things, but that is one way that your score affects you. So not only your approvability, but the amount of interest that you'll be paying over time. Also, risk-based lending means the riskier the vehicle, the higher the rate's going to be. So let's say you're purchasing a motorcycle or a boat, and your score is on the lower side. You're going to see the rate be a little bit higher than someone that has pristine credit and is trying to get just a vehicle for everyday use. So that's just one way that lenders kind of create their interest rates. So also there are times that landlords and insurance companies, even employers, can check your credit. Now, there have been a lot of changes in laws where employers, I don't believe at anymore that they're allowed to actually deny you for a job based on your credit score. There could be items on your credit report, like let's say you were going into mortgage lending and you had a foreclosure. It could possibly prevent you from getting that position. But your actual credit score, usually as far as employers go, it's not a huge factor, but it's still something that can be pulled by, again, a landlord or insurance companies, even phone companies, where they want to see how you've paid other people. It's kind of like, I always compare it to like Yelp reviews. We have access to so many different options online to figure out where we want to go eat, or is this product good? Because we have consumers online all the time, and they can go and they can leave comments and reviews. So your credit report is kind of like a review from a lender, where we can go on there and we can make comments and we leave reviews on your payment history. And if it's not a good review, a lot of times, what do when we see bad reviews? Sometimes you'll stay away, right? So it's the same thing for your credit report. Your credit score is a numerical measure of your credit worthiness. So it means the likelihood that you will repay what you borrow. And there's several types of scores available that are calculated using a variety of factors and different weights, but they generally focus on the information on your report and not personal factors like your age, your income, your gender. I've heard some people say, oh, I paid my phone bill late one time and I'm worried it's going to go against my credit. Those do not actually report unless they go into a collection status. So things like utilities, phone bills, anything that doesn't pull your credit usually to give you an approval to lend you money does not report on your credit unless you default, right? So it goes into collection, and then a collector is trying to get that money. I've heard people say that their job has impacted their credit, the type of position that they have. When we take an application as a lender, we do take your income in relation to your debt into account, and also job stability. So how long have you been at a job? Do you bounce around a lot? Those are other factors as well, but it does not affect your credit score. It can just affect lending decisions. So as the name implies, a credit report is also a report of your credit activity. So for every account that you have, it shows who it's with, your payment history, the original amount that you borrowed, and what you owe on that now. So meaning you took out a car loan for $20,000, now you owe $5,000. It shows that you've paid it down, and that helps your score as well. It's another factor. There are 3 major credit bureaus. So Equifax, Experian, and TransUnion. Theoretically, all 3 of your reports should be the same, but it's not uncommon for one bureau to collect information that another one does not. And it's not that it's the way I worded that, I don't like that. So it's not that they're collecting the information. Some lenders do not report to all 3 bureaus. So when you take out a mortgage or a credit card or a car loan and you're trying to rebuild all 3 credit reports, that's a good and important question to ask. Are you going to report to all 3 bureaus? Some people will be added as authorized users to credit cards and think that it will help their credit, but some lenders do not report authorized users. So really, it's not helping your credit at all. So those are good, important questions to ask. Today, instead of reviewing and evaluating the report itself, many creditors simply pull your credit score. Not only does it save time, but the scores provide an objective, a consistent way of analyzing applications. Now, I can tell you as a credit union, we do not just pull your score, we manually underwrite it. So I print your credit report as a lender and I look through it and look at the application and make a decision. And if you're approved, then your score is what determines your interest rate. But we don't just look at your score and say, oh no, you're not approved. We look at what is making your score what it is, and also try to kind of give you ways to improve it if it's not as high as you want it to be. But not all lenders are like that. So unfortunately, when you're doing applications, if you've ever been offered a credit card at a TJ Maxx or a Kohl's or Sears, and you're like, oh, I have good credit, I'll take the discount, and then you don't get approved, sometimes because it's just pulling your score, or it can see that you just opened a new credit card and automatically denies you. Most commonly used scoring is the FICO score. It ranges from 300 at the lowest to 850, and the higher score is the indication of less risk for lenders. So those with higher score are usually easier to grant credit to. When there's no standard for what constitutes a good credit score, one benchmark to keep in mind is that many mortgage lenders require a score of at least 620 for approval, and 740 for the lowest interest rate. So I've even seen where they want the middle score, and the middle score is usually it's TransUnion. They want it to be at least 640 or higher for a mortgage loan. So it depends again on the lender. Since Equifax, Experian, and TransUnion credit reports do not necessarily contain the same information, your score with each bureau can be different. So yes, you could pull it with one company and pull it with another. I don't know if anybody's used Credit Karma, but those are score simulations, and you could see your TransUnion score may be a 690 and your Equifax score may be 620. And so that's up to you to kind of really monitor your credit report and to make sure that things are reporting correctly, and to kind of question when they're not. So there are a few components of your credit score that really weigh heavily. So if you look at this slide, it shows you the amounts owed is 30%. I always tell people, if you're just starting to build credit or you're trying to rebuild your credit, you can have 100% positive payment history on a car loan or maybe just your mortgage and have zero other accounts, and your score will still remain in the 600s, because without revolving credit, which is like a credit card or an open line, it has nothing to really go off of for the amounts owed. Amounts owed is capacity, meaning if you have a $1,500 credit card and you only use 500 of it, that's 30% of your credit score right there. So 30% of your credit score is pretty much not maxing out your credit cards. So I tell people to always leave it at least 50% of what your limit is to help that score go up. And even if you don't, a lot of people want to stay away from credit cards. They don't want to use them. If you want a higher score, the best thing to do is just open one and leave it open with a zero balance, or use it once, pay it off, leave it at a zero balance. And the reason for doing that is, as a creditor, we can see the highest you've ever taken the card and that you've paid it off. So if you've used 1,000 out of 1,500 and now it's at a zero balance, we know this person obviously can make payments on this type of limit and use it responsibly by keeping the balance low. So that is a good factor when you're looking to lend or when you're looking to borrow. As a lender, it's really great to see when, cards are not maxed out. If they are, and it definitely reflects on your score. I've seen people pay off one credit card and their score go up 50 points. So it really does make an impact. Now that payment history, of course, is that 35%. making sure you're making your payments on time, no 30-day lates. Now, only 30 days or more report to your credit. So if you're 30 days late or more, that's where you're going to get a hit on your credit. But sometimes creditors will report in the middle of the month. So let's say you are 15 days past due on your car loan. Although your late payment won't report, the amount past due will report. So if at that time they report to the credit bureaus on the 15th, on the 25th of each month, and you're 10, 15 days past due, there's still a past due dollar amount that we'll see. Even though it shows 0 30-day late, we could see it's currently past due, and it can affect your score as well. So that's something else to think about, is making sure that your due dates are where they need to be, where you can make your payments on time, not just within before the 30-day late mark, but before even just 5 days. Even though a lot of lenders do have that grace period to use if you need to use it. So one thing I did want to mention is inquiries. So you could see that the other factors on that slide, I'll go back to that slide. Whoops. So inquiries and new credit, types of credit use, those are all very minimal. So I hear a lot of people say, if you pull my credit for this loan, is my score going to go down? Well, your score is going to go down if you take out a new loan, because it shows that you have a brand new loan taken out. You owe 10,000 out of 10,000 that you just took out. So that goes back to that capacity. And your score can go down if you're applying excessively. So that means, 5, 10 times in a month, or even more than 5 times in a year, it can start to cause it to go down. But if you're not excessively applying for credit, it is very minimal. The new loan that you take out, even if your credit is really good, it will temporarily decrease your score. So if you're a score watcher and you have that Credit Karma, you'll see that score go down a little bit when you take out a new loan. And then as you start making those payments, bringing the balance down, that score will recover. So I touched on this a little bit before, that having a low score can really cost you. The score determines your approval and your rate. And the lower your score is, the higher interest rate you're going to get. That also increases your monthly payment. So even if you're thinking, oh, well, I'll just, I'll pay the loan off early, I can double up on payments. You could do that anyway if your score was a little bit higher, and pay it off even sooner at a lower monthly payment. A lot of people, we ask, what is your comfortable payment when we do the loan for them, because we're taking into account what they can pay monthly. And a lot of people can double up, but if something happens that's unexpected, you're not then obligated to a higher payment that you thought that you could make. So we really want to make sure that people are taking payments that are within their comfortable monthly payment range, and having a higher interest rate can make that very difficult. There are many ways that you can improve your credit score. Always paying on time. They're all listed here. Paying down your existing debt. Now, diversify your credit is what I was talking about earlier. Having more than just installment loans, just more than just a mortgage that starts out at a 1 monthly payment, and once it's paid off, it's gone. Having a mix of credit is what we say, a line of credit, credit cards, auto loans, a good mix. Paying on time and using the credit responsibly is really the best way to keep your score higher. And also checking your report for errors. There are creditors that, we do everything electronically these days. So it's not like we're writing down each person's payment history and sending it to all 3 bureaus via mail. It is done by a system. It's done, usually it's pretty automated. And although we check it over, there's ways to check it over. Technology is great till it doesn't work, right? So it is often that you may see a collection that's not yours, or a late payment that shouldn't be there. And it is upsetting when you work really hard at at your credit and you see something like this, but you're protected as a consumer to dispute information if it's not correct. So if you go directly to the creditor and say, hey, I noticed that you're reporting this late payment and they refuse to fix it, they're not in compliance, first of all. And second of all, you can go directly to the credit bureau and the credit bureau will deal with them directly. So as a financial institution, when I say in compliance, we're held under federal regulation to make sure that we're reporting correctly. Now, and unfortunately, we do have people that ask, hey, I've never missed a payment with you ever, and I messed up and missed a payment this month and it was 30 days late. Can you do me a favor and remove it? Unfortunately, no. Again, we have to report correctly and accurately, and we can't just decide when we want to report, take somebody's late payment off their credit or make somebody appear to be late when they're not. It's just, there's a lot of laws and regulations about that. So, and you do have rights as consumers to dispute it through the financial institution yourself, and then through the credit bureaus who can work with the financial institution. And a lot of times it will just be completely removed or updated, whatever happens, but make sure you're checking your credit report. You are entitled to a free credit report from each credit bureau. Now, I saw the other day, Equifax, when I went on mine, they said I could pull 6 free a year, which is awesome. But as a consumer, you're allowed, as far as regulation goes, 1 a year for free. And I always say, pull it every 3 months or every quarter from the different bureaus. So you'll pull the TransUnion and then wait a couple months, pull Equifax, wait a couple months, and then Experian, or use the credit monitoring services like Credit Karma. But you can get your free credit report at annualcreditreport.com. It is reputable. We always say to use that. It will take you to the bureau's website directly, and you can order them to get an actual full report. Now, again, sites like Credit Karma, they're really great to see the items on your credit report, but as far as your score goes, it's a simulation. So basically, what they're doing is they are pulling the information on your credit, and they kind of, without actually pulling a credit report like a lender does, so it doesn't give you a hard hit, but they pull the information and they simulate a score. So they're like, pretty much based on the information here, this is what your score should be. So it's also common to pull it through Credit Karma and then come to apply for a loan and your score is completely different. So just know the scoring might not be right, but it's great to make sure that you are checking for accuracy. And even you'll get alerts when when your credit card balance goes up or when the credit card balance goes down. So you can see when your creditors are reporting. I know some people like to pay off credit cards and then wait till their score goes up and go get a car loan or refinance. So it's a great way to monitor that way. Keeping your old accounts is really great. Even like I said, if you have a credit card that's open and you're not using it, don't let it go inactive to where they close the card out. Maybe use it every once in a while and pay it off. But your old accounts show your account history, your length of accounts. So if we look at your credit report and it is a bunch of brand new accounts, that's a red flag. It's called escalating debt. It's really good to see some accounts that are older, especially accounts that are older and paid off with good payment history, that shows credit responsibility. So one thing though, I did want to mention too with credit cards, if you have a lot, like 15 credit cards and decide to do a debt consolidation, which we've done before, we do that often for our members. So we consolidate it into one monthly payment, but we ask that they close their cards for us to do this. For one, it lowers the risk as a lender. It doesn't give the person that we're lending to the option to rack the cards back up. And then they have this brand new $15,000 signature loan and then $10,000 on credit cards. It's just a bad place to be. People get sometimes they're hesitant to close their cards. If you leave a few open, first of all, if you have that many cards, closing them is going to be okay because you only need a couple or a few to help keep that score going up, and to keep it good if you want to maintain your credit score. Closing a few if you have a lot open, does not impact it for a very long time. Again, it may be a temporary impact, but as time goes on and payment history goes on, it becomes less and less of an impact. So you don't want to have too much open either. So that goes to avoiding excess credit applications, applying excessively, 5-10 times a month with different credit cards or lenders. Now, when I talk about avoiding excessive credit applications, the first thing that always comes up is applying for mortgages or applying for auto loans. Auto loans, when you go to a dealership, if you don't go to your credit union first or your bank first and get pre-approved and just go into the dealership with an approval and say, don't pull my credit, they do something that's called a rocket pull or a rocket, pretty much rocket application. So they work with maybe 10, 15 lenders that they have contracts with, and they'll send the application out to all of them, and all of them will pull your credit, and you'll have all of these hits. What's really great about the bureaus is they have actually made it to where if you have multiple hits in one day and it's for an auto loan or a mortgage lender, it counts as one hit. So it's really nice to know that. It gives you peace of mind that just because you want to buy a car, your credit will not be tanked because of the excessive inquiries. Because it does really look, as a consumer, looking at your credit report and seeing all of the hits, and when you've been working hard on your credit, can be really alarming. And it used to impact your score a lot more than it does now. So again, if you're applying for a mortgage or an auto, make sure they're doing it in the same day, within the same 24-hour period, and it will affect your score a lot less. It's like one credit pull. And then be patient. So it does take some time. If you're trying to rebuild, especially, it takes some time. So just be patient. Follow the advice that you're getting today. Do what you need to do to get your credit right, and just keep doing that and watch it slowly go up. I know some people want an overnight fix, and just like anything that's good, sometimes it takes time. But again, monitoring it and watching it go up is the best thing that you could do. So there are credit companies that claim to repair your credit for free, or repair your credit for a high fee. They won't tell you it's for a high fee. But what they'll say is, okay, here, this is really easy. What you'll do is you'll come in, you'll pay one monthly payment that's a lot less than your minimum payments, and you'll be paying us instead, and then we'll pay all your creditors, so you don't have to worry about it, and we'll negotiate with your creditors. So you'll be paying less interest. This is consumer credit counseling. So you'll be paying less interest, less monthly payment, and we'll get your debt cleared away. So it does say that they will flood credit bureaus with disputes, issue new identity. They kind of mess with your credit, kind of manipulate it a little bit. So basically, you may be paying them monthly to make the payments to all these creditors, when what they're doing is they're not making payments, and they allow them to go into charge-off status, and then they will settle for less than the full balance. That's one way they do it. And then they'll dispute it on your credit to try to get rid of any history of it, which sometimes can work. It depends on the company. A lot of them they're really trained to just do whatever they have to do to try to get your credit fixed, whether it is honest or not. And another thing that people aren't aware of is that, yes, sometimes they're making payments to these companies while these companies are letting their cards go delinquent and settling for less than the full balance, and they're actually getting a lot of that money that you gave them as the fee. Or they'll charge you a high fee to literally just go in and dispute items on your credit, which you have the right to do yourself if it is inaccurate. So rapid rescoring is one thing that I talked about. I've seen people pay off a credit card and then their score shoots up really high. It is offered by some mortgage lenders. At times they may say, hey, your score's a little too low right now to get a mortgage. But what you could do is you could pay off this credit card, and we'll do a rapid repull, meaning it will update with that information in real time, and we'll get your score at where it needs to be to get this loan. They, sometimes they'll encourage you to take out a loan, like a payday loan, pay it off, and then use the credit card to pay off the payday loan, or whatever it is you need to do to manipulate your credit score to get where you need to be. But it is something that mortgage lenders will do, that it can be beneficial, especially if not taking out the payday loan and then using the credit card to pay it off again, but paying off certain debt to get your score where it needs to be. It can be definitely beneficial, especially if you're going into a mortgage situation. So some companies, a mortgage lender is usually the only type of lender that will do a rapid rescoring. But there's other companies too that will send you emails and they will market, this is how you can fix your credit score. And they'll try to get you to sign up for a program that ends up just putting you in a worse financial situation. So those are things to kind of stay away from, especially consumer credit counseling, which is why we offer the alternative through balance for our members, because they do negotiate with your creditors. They call each one individually and say, hey, this person's going through a financial hardship. Is there a way to get this lower? If we can pay this amount right now up front. So they really, and they don't allow it to go negative and get charged off. They really just want to get your credit in a better position. So the Vantage Score is 300 to 850. It was created by Equifax, Experian, and TransUnion as an alternative to the FICO score. So your Vantage Score consists of numerical score and a letter grade. So recent modifications to the scoring model have allowed scores to be generated for those with credit history shorter than 6 months and collection accounts with zero balance to be ignored in the scoring. So where your FICO score, even if you have a collection, it will remain on there for a few years. Even if it's been paid, it can affect your score because it still happened. It's not like it didn't happen. It will affect your FICO score is in relation to your Vantage score. It's not going to do that. And the Vantage score is calculated a little bit differently. You can see that available credit is only 1%. Utilization is 23%, is where with your FICO score, it's a little bit more, meaning keeping your credit cards at a low balance if you have a high, in relation to the limit. And payment history is only 28%. Available credit, recent credit history, 30%. So that weighs the heaviest, meaning how much have you taken out in a short amount of time? So there are other scores that are on your credit score as well, on your credit report as well. As a lender, when we pull a credit report, we'll get the FICO Classic 8, if that's what we use. We'll get a FICO Classic 8 score, so it'll say 750, but then your bankruptcy score may be 10. So this is basically what gives us as a lender how high of a risk you are to file bankruptcy. And what that basically means is the 3 signs of bankruptcy are at max capacity on accounts, excessive unsecured debt, and escalating debt. Those are the 3 factors, and the credit bureaus use those factors to let us know as lenders right away when we look at the top of the credit report, this person is a high risk for bankruptcy. Internal scores created by creditors and non-traditional scores. So they look at non-credit information. It may be better to establish a traditional score. So this is things like, so check systems is another report that banks use to kind of see where your checking account history is. And a lot of people kind of worry about their qualifier score through check systems more than their credit score, when you should be worried about both, but your credit score as far as lending is what you really want to pay attention to. Hope it's not going back. Sorry. There we go. It'll just be a second. I accidentally. So as far as obtaining your credit score, you can get your score for free if an adverse action is taken against you. What that means is you apply for a loan and you're denied, you're able to get your credit score. And you usually receive a document. It's required for us as a lender to send you a document called an adverse action. And it will tell you the date that we pulled your credit, what you applied for, why we weren't able to approve your application, your credit score, and the factors that are affecting your credit score according to the credit bureau. So we're not just looking at it and saying, oh, this is what is affecting this consumer's credit. The actual credit report tells us these are the factors that are affecting, and it'll say lack of revolving account information, account balance in relation to limit is too high, no installment account history. In addition to the above factors, the amount of inquiries has negatively affected the credit score. So we will put those items on the adverse action and send it to you if you are denied for a loan, or if we close a credit card. So let's say you have a credit card with us, you don't pay it, you go over 30 days late. I believe ours is 90 for closure. We have to send you an adverse action. So that's what that means. In most circumstances, you do have to pay for your score. And it is important you pay attention to what score you're purchasing, because like us, we only pull through TransUnion. If you want to know what your score is before you even apply with us, because you're trying to just avoid getting your credit hit unnecessarily, if it's not where you want it to be, you don't want to go check your Equifax score. You'll want to check with the lender, what credit reports do you pull? What do you use? Because we only pull TransUnion. So if that's, if you're going through a lender that only pulls TransUnion, that's what the score is that you'll want to check. And also there are a lot of fraudulent websites online that will try to get you to pay for things and then give you something that's just kind of bogus or a simulation like the Credit Karma does. Some scores that are made available to consumers to purchase are not used by lenders. So since it is the most widely used, it is best for you to purchase your FICO score. Even then, keep in mind, you might not be seeing the same score as your lender. So when I said earlier, we pull a FICO Classic 8, and that FICO score that we pull in the consumer side, it weighs heavily on revolving accounts. Because when we're lending for car loans and we're lending for credit cards and signature loans, that's what we want to know is what is the score based on this person's revolving account history. When they do a mortgage, they may do a FICO Classic 4, which is modeled to tell us how you're paying on your installment account information. So your installment account information will weigh more heavy than it does on the other scores. So there's so much that goes in to when we pull your credit and when you're checking your credit, and how much it can vary. It's not uncommon to pull a different score than a lender does. While most people should take an active role in creating and maintaining a good credit score, not everyone needs to. Know when to concentrate on something other than your score. So if your score is already excellent, the only advantage to having an 830 score instead of an 810 is bragging. Both scores likely qualify for the same interest rate. For us, if your score's over 750, you're getting the best rate. So between 750 and 850, it is the same rate and probability of you getting approved for a loan. Between 680 and 740, it's the same thing. So you will not be using it. If you already have everything you need and won't be looking for a job or insurance products in the future, a score has little meaning. You don't want to start paying your bills late or taking on excessive amount of debt, but there's no need to stay up at night worrying about your credit. You have more important financial issues to deal with. If you are, for example, saddled with overwhelming debt, don't have the money for essential expenses, or have legal issues, your score rates are minimal to helping to basically getting yourself into a better position. So a lot of people don't want to take out consolidation loans for a large amount because they're worried about how it will impact their credit score when they're swimming in debt and aren't able to pay the credit card's minimum balance every month. So, or they're paying them, but then they can't get essentials that aren't reporting on your credit. So it's really just important to not obsess over the credit score because it is so volatile, right? I mean, all of these different factors, and I told you, even the same lender can pull a different credit report based on whatever you're applying for. So we do have a website here. You could go to cafq.balancepro.org, and that is a really great site. Even if you're not a member, you can go to this site right now, and there are an array of resources that you can even type in a keyword, like let's say marriage, if you're looking to get married, and they will pull up all types of articles and workshops, and even sometimes they'll give you budgets. So I just really encourage you to go to cafq.balancepro.org and kind of check that out. I'm going to look in the chat here really quick. Oh, thank you for putting that in there. And then does anybody have any specific messages that you'd like to ask right now or put in the chat? Okay, hold on one second. I'm going to stop sharing my screen, or at least try. Okay, so I have a question. What does it mean to receive a statement of credit denial with a principal reason? Other applicant, unable to verify applicant information or identity. Do I still have ability to obtain a credit report? So if you're doing anything online, if anything doesn't match, like the social, the date of birth, the address, the employer, if something doesn't match, it's very often that they will say, we couldn't verify the information, and you may want to do it over the phone in person or another way than doing it online. I see a lot of applications that don't go through because something's off, and you may want to actually call the credit bureau just to make sure that everything that's on the credit report is correctly reporting. So if they're telling you that they couldn't verify identifying information, it could be that the credit bureaus have it wrong. I've seen socials wrong and date of birth. I've seen all types of things wrong. So that could possibly be a reason for that. If someone takes out, I had a direct question. If someone takes out credit in your name and it is now in collections, what is your best course of action to resolve the issue? First, start with the creditor. If you see it on your credit report, usually you have the creditor information there, or you could Google it, look up how to get a hold of them, tell them this account was taken without my knowledge. They may ask for a written statement. They may ask for your ID. There's a few things that they'll do. If they say, nope, we're not going to help you, sorry, it's your problem, you go directly to the credit bureau. You go to transunion.com, Equifax, or Experian. You can call them. There's 800 numbers for the credit bureaus. And you can also pull up the credit information directly through the website. And usually when you pull up your credit report, there's little buttons that say file a dispute, and you will click that and put in the reason, and they will investigate it themselves. So the credit bureaus will ask the creditor, do you have proof that this was taken out by this person? And if not, then they will completely remove it from the credit bureau. There's also a way to put a consumer statement on there. So you can go through the credit bureaus directly and say, this account was taken out without my knowledge. If the dispute doesn't work for whatever reason, or if it's taking a long time, you can at least put that on there. So when I pull your credit as a lender and I see this collection account, and I'm like, that's not like this person, they have good credit history, why is this account here? I can go and see the consumer statement. Oh, well, that makes sense. It was taken without their knowledge. As consumers do read, creditors do read that.
So Renee, this is Ron. I was the one that asked that question.
Hi.
When you say a creditor, is that the bank or is that the, I mean, so if you get a credit, if somebody takes a credit card out in your name, that is a credit card usually go through banks, right?
Right. So even so, if it's like TJ Maxx or a store credit card, usually they're associated with a bank. So SYNCB or Chase or whoever that may be, you would contact them. The creditor is the bank, the financial institution. That's right.
And if it's gone to a collection agency and the bank has kind of passed that bill on to the collection agencies, it's still worthwhile to talk to the bank?
It is. You could try to go directly through them. Originally, there are a lot of times where they'll say, sorry, we sold it. You're going to have to deal with the collection company. And then even dealing with a collection company is harder. So at that point, it would be a better bet to go through the credit bureau themselves to try to deal with the collection company to get proof that that account is yours.
Is there like one, how do you know which credit bureau to go to? You go to all three of them or?
If it's reporting to all three, you will want to contact all three. So one collection could be reporting on all three reports, or it could be reporting to one or two, but you'll want to dispute it through all three.
Okay, thank you.
You're welcome.
Meg, oh, sorry. Could you talk a little bit about how to deal with, like, recently my husband's company had a data breach. And like, you know, it happens all the time. What's the best course of action to do if you've been notified that your personal information may have been leaked in some sort of a data breach?
So like you said, it does happen all the time. The probability that all of us in here have had our information leaked is very high. If you do anything online, even if you don't, because information is stored electronically through our electric bill, through our, even if you don't pay your bills electronically. I know people who are like, they just want to go into the bank, they want to go into the store and pay their bills. They want to do nothing online, which is fine, but you have to realize all of these companies are using online servers. So AT&T, Panera Bread was one of the biggest data breaches, and that's just people's information that was retained who had Panera accounts. So you think that you're safe there. It was one of the largest data breaches ever. So it's very common. And a lot of the information that is leaked is not public record. So everything except for your social security number is pretty much accessible at the tip of fingers. So the best thing to do for yourself is to monitor your credit. If anything's weird, you could put a credit freeze on your file. If you really feel like your identity is being stolen, not just that maybe your address and date of birth or something was leaked, but if you believe that somebody's really trying to steal your identity and apply for credit in your name or anything, or your wallet was stolen, sometimes people do that. If their social security card was in there, you could put a credit freeze. Meaning if I tried to pull your credit as a financial institution, it says frozen, and you as a consumer, you have to call them and get a PIN for me to enter. So it's basically like they give you a password after verifying you to give to me that allows me to pull it one time, and then nobody can pull it after that without that PIN. That's one way that a lot of people deal with real identity theft is credit freezes. You can also put an alert on your credit file or a consumer statement that you were a victim of identity theft, and to call a phone number and put your phone number on there, and you would have to get a phone call anytime we see that. We have to hang up. If someone applies over the phone, even if it's the number they're calling from, we have to hang up, call a phone number on the credit report, make sure that they answer and that they're applying for credit. So there are a few ways that you can go through the credit bureaus directly to protect yourself.
Okay. Do either of those affect your credit score?
No.
Okay.
They do not. They have no way on it. I got another direct question that says, if I take out an auto loan in my name with my daughter as co-signer, will she still earn credit? Yes, she will. normally she would be the primary and you would be the co-signer. So you're guaranteeing the payments, but she would be the primary, saying it's her car, she's responsible for it, and you would be co-signer. She'll get credit, good positive payment history. I will say it will show up though that she's not the only one on the loan. So a lot of people think, well, I've paid on this car loan with a co-signer for 6 months, and now I want to remove the co-signer after 6 months of payments. If they're still very limited, we could see that another person is on the loan. You may not be approved to get that into your name as quickly as if you were an more established credit. So yes, it definitely helps you build a score if you're at a 0 score, and it definitely shows positive payments, but do not expect to pay on it for 6 months and try to get off of it and into just her name. I would always give it a year or two of good positive payments if she's very limited with credit. A good way to help the credit as well is, by adding her as an authorized user to a credit card. Even if you don't want her to have the card, you could keep the card, but it goes on her credit to help us score, at least to where she can get one of those automatic approvals based on just a credit score with an individual card in her name. Does anybody have any other questions?
Hey, Ramey, this is Ron again. Is
Hi.
there a fraud agency or anything like that kind of helps people that have been frauded? Like, for example, my relative that, had somebody open up a credit card in their name and in his name, and then, took the money, and now he's being chased after to repay the bill. And, it's really is a fraudulent situation, but there's no, like governmental agency or anything like that to support people that have been taken advantage by fraudulent people, is there?
There is the consumer, the CFPB. So that's who does all of the compliance. They're the ones who make all of the compliance laws and regulations, the consumer credit, the FCRA, the Fair Consumer Credit Reporting Act, and the consumer's rights. It's really the best bet would be to just dispute it through the credit bureaus and try to do what you can there. And if it's significant enough to possibly get an attorney involved.
Okay, thank you.
Mm-hmm.
Does filing a police report do anything if you're, if you've been a victim of identity theft? Does that
Yes.
help?
It may not help immediately, but a lot of creditors, if it's over $100, will require a police report to be filed for them to do anything, because it is theft. So it does help. And if at any point they can find the person who did it, it would be a higher probability of being able to go after them, if you have a police report. If you don't, and then you want to wait 5 years and go after somebody, it may be a little harder if you didn't have an initial police report in the first place.
Okay.
Do I have knowledge of good credit protection? And if so, what is best? What can you elaborate on what you mean by credit protection? When I hear that, I think of payment protection, which is an insurance that we offer on our loans if you're involuntarily unemployed or out of work due to illness or injury, or if you pass, the loan is paid in full, which is amazing, but I'm not sure if that's what you're referring to. Okay, so lifetime credit protection. I'm not familiar with that. I always say just do your research, and any third parties, just make sure you're doing your research and that it's a reputable company. The best thing that you could do is make sure that you're monitoring it yourself, and taking the steps that you need to take if you think that something's off or something's wrong. Because I know that there's a lot of companies out there that offer something for some fee, and they may or may not be reputable. Any other questions? And then I'll put my email in the chat too, and you can feel free to email me with any questions that you have if you think of anything after this, or if you want to ask about credit union membership or any of the services that we offer, I'd be happy to discuss that with you. And I did want to mention too, at my branch, and I'm located in Elgin, we're doing a contest right now and giving away a gift basket for member referrals. So if you refer somebody and they open an account, you can enter to win a gift basket. But and then we have a loan sale coming up as well, and we will send that information to you, Fox River Valley, and make sure that it should just, I think it's 2 days. They run it for 2 days, so we'll make sure we get all the information out, and I'll also send you something on balance.
Okay. Great. Thank you so much, Renee, and everyone. Thank you so much for coming tonight. We really appreciate you. If you're interested, again, you can pop in with us tomorrow night for Mortgage 101. And yeah, have a great night, everybody. Thank you so much for coming.
Thank you. Have a good night.
Thank you.